So with the crypto markets in free fall, breaking into the 38Ks and even lower for Bitcoin right now, many people are asking where next? Should we sell our bags? Should we be DCAing in? Let's answer some of these questions in today's video. Also, make sure you subscribe if you are new and support the channel. Let's jump on in. Here's the chart for BTC. And of course, yesterday I was leaving the house, going to the gym, normal evening stuff, and we were pumping all the way up to around 43K, feeling pretty good about that. I came back a few hours later and we were absolutely nuking. We went down to around 41K before I went to bed, and then we've just continued going down deeper and deeper as I've been catching up on my beauty sleep. So things got pretty nasty there. We dipped into around 37,700 bucks at the lows, and as you can see, I've mapped out an area where we've had some previous confluence, support and resistance, hence there will be some liquidity around these areas, and it's between around 37 to 38K. We've come and actually dipped into this sector and had a little bit of a small spring out, but nothing to write home about at this moment in time. But this is the kind of key area we're looking for to hold as support, around 37, 38K. We've come down here, we've taken some liquidity from there, and now we want to see where can we go from here next. To the upside, we're looking to the region of around $42,000, but most people are thinking down, down, down as you get into that mind frame when everything has just been going down for months on end now. Where next? Well, potentially we can go all the way down to around here at around $29,000. That was the summer low, and that is the next big area of support for Bitcoin. So that would probably be worst case scenario right now. I don't particularly see, unless we have a huge black swan event, us going below this, but never say never, especially in crypto. And there are issues on the borders of Ukraine and Russia, which could, of course, be a black swan event. So SPX, this is the S&P 500. It came and tapped the 200 moving average just earlier today. Still a few more hours of trade left for this before closing out for the weekend. I would imagine traders who wanted to ensure they weren't sitting uncomfortably over the weekend have already sold out. And this is actually printing a hammer candle, which is often a reversal candle if we're looking for a little bit of hopium here. So hopefully this would be a bit of a bottom and somewhere we could reverse from. In terms of the stock market versus crypto, we're seeing high correlation. Essentially, Bitcoin is like a levered version of the equities market. Will the equities markets continue to sell off? We don't know, but there's a big FOMC meeting next week. And we've seen Jerome Powell posturing negative sentiment, hawkish kind of comments towards quantitative tightening and increasing rates. So he was clearly wanting the markets to cool off and using words for this purpose. So as TXMC from Glassnode here reports, Jerome Powell is trying to get the markets to de-risk themselves out of fear using only words. And it is working. You can definitely see the fear in the markets right now. And of course, this is a huge sell-off for the stock markets. They're not used to these crypto-like losses in such a short period of time. Do I think that this will go continually lower and will enter in some huge crash for the stock markets? Personally, I don't believe that will happen right now, due to the fact you've got to think the politicians are incentivized to keeping the stock markets going up. They put so much of their own money in these things. Nancy Pelosi has over a $500 million, yes, a $500 million portfolio from all that good insider trading that those kind of guys are doing. And it is literally an up-only market over the long run. So it is unfavorable for them on a personal note for this to continue going down. And a lot of individuals in the US have a huge amount of their net worth tied up in the stock market as well. So this is politically an unfavorable thing for the markets to be going down. And so I think we will get a bit of a reversal and some more dovish comments from the Fed going into next week. The meeting is on the 25th and 26th of January. That is next Tuesday and Wednesday. So I'm sure we will all be glued to any updates from here. And this really puts into perspective how bad things are for stocks. NASDAQ investors' sentiment is worse now than it was in March of 2020. That's an extremely aggressive, bearish posture. So super bearish sentiment from those invested in the NASDAQ. As you can see, this is the latest read all the way down here. And this is really quite uncharted territory. So it seems like the words that Jerome Powell has had such a huge effect already without actually changing any policy. We've not actually seen a rate hike. We've not actually had quantitative tightening at this moment in time. So the optics of suggesting what you're going to do clearly has a huge impact on the market. And I think having such a detrimental impact at this moment in time means that they may not actually go through with the 3 or 4 rate hikes that many are expecting. So I think next week will be a big moment. In terms of crypto, fear and greed is at 19. So again, very low. So sentiment across all markets right now, pretty damn bad. But on the flip side to this, so this is from Remy, one of the most outspoken lunatics and of course co-founder of Real Vision. China is definitely going to launch some sort of QE this year, quantitative easing. The $1 million question, will the Fed follow through and hike? So I think a lot of people are suggesting that the hikes won't really take place. Maybe they'll put one in here and there, but people aren't expecting as an aggressive move from the Fed due to the fact we're seeing kind of the binary opposite happening in other sectors of the world. So the EU have been pretty cautious and suggested that they're not going to start imposing any rate hikes. Japan, similarly, being very dovish in their comments. And then we have China, which actually lowered mortgage rates. So China cuts key rates, steps up monetary stimulus to boost the economy. So just yesterday on Thursday, their monetary authorities stepped up efforts to prop up the slowing economy after data earlier in the week pointed to a darkening outlook for the country's troubled property sector. They don't want a property collapse, they want economic strength. After posting some pretty bad GDP numbers relative to what they've done in the past over the last year or so, they're trying to show a sign of strength here and come out of the other side from the COVID pandemic. So when you've got large Asian economies, the Europeans still on the easy money approach, it would be a bit odd if America goes in the complete opposite direction and starts to really tighten things up at that same moment in time. It wouldn't make a whole lot of sense, in my opinion. Then from a little bit of Hopium from Tech Dev here, posting this chart from Bit Harrington, talking about the Bitcoin weekly RSI at a 40 after a local top. So he's suggesting that this has happened before, as you can see from the chart here and here, but it is actually a reset. The bubble corrected. No one knows what's next. Perhaps we even go lower to an RSI reading of 30, but this level is unique in Bitcoin history, but we'll see what happens. He's holding on. So Tech Dev came in with this. We're far closer to the end of a corrective period, which began in February 2021, than the start of one. Some call it a bear market. I call it running correction with a large impulsive uptrend. So just a few perspectives here on the crypto market, on Bitcoin specifically. Crypto eyes have said this: I don't think that this all just dies in one move. Markets don't just die. The lower high awaits and will take longer than people expect. Liquidity is at 38K. Run it and then low volatility base and recapture the 50 moving average and trade up. So that is the purple line on here, the 50 MA. And he's suggesting we need to put in a macro lower high after pretty much just going down like a ski slope here. We need to put in a lower high at some point. And if you do want to take money out of the market, that would be the point at which to do so. Currently selling at a huge loss after days and days and weeks of just down only is always a bad thing. Selling on extreme red days always gets you wrecked. It's at least probable we will get a relief bounce at some point over the coming days or weeks. And my guess is with the Fed meeting next week, 25th, 26th of Jan, from this, we will have something that spurs the markets onwards and upwards. They're not going to continue with massively hawkish comments. After seeing what's just happened, they're literally going to push the economy into recession sooner than they would wish. So I do think we will get a relief rally after this date next week. And in terms of just general game theory and big institutional investors right now, this was a good point made by Nicholas Flamel. Saylor has an average cost on his Bitcoins of around 30,159. And while the opportunity to buy Bitcoin near the cost average of one of the biggest whales should be irresistible for big players. So we know he's been DCAing for a long time now. He's bought some higher prices, 47.5K as of late, but his average is around $30,000. So it would make sense that that would be maybe the ultimate bottom due to the fact other players are going to come in at that point and say, look, if Michael Saylor's got an average down here, maybe we'll get our feet wet at this point. And there's a good likelihood in months to come from this, we will see announcements that big institutions, some really huge names, come out and disclose that they bought Bitcoin with an average price probably around somewhere where we are trading right about now. I can't imagine they're not accumulating at these regions. After huge hype during 2021 and prices going up to 60 odd K, of course they didn't want to buy the top, they didn't want to be buying the retail bags when everyone was up a huge percentage. But now after this like 40 odd percent retrace, I can imagine institutions are buying and sniping at these levels. So just like at the end of July of last year, year when we had that real puke day. This feels very similar in my opinion, that kind of puke mentality, a big drop down lower into a new price bracket going from the 40s to the 30s. A lot of people would have set the 40k region as their kind of ejection mark and said, right, enough's enough, I'm out of the market, we've broken into the 30s, goodbye, see you later. But this typically is a bad time to sell. Of course, not financial advice, do whatever feels most comfortable for you. But this from Captain Rational here, Mr. Noah Seidman, are you planning and seeing what's actually outperforming? And now is a good time to actually DCA in to the good, strong performing bags. And of that, Luna has to be one of the strongest cryptos there is out there, if not the strongest right now, holding up exceptionally well. Higher low, higher low, higher low, higher low. It's still in a pretty damn good uptrend in my opinion, and has one of the strongest narratives and fundamentals in the crypto space with amazing tokenomics. So Luna for me is one I'm going to be DCing into over this period, with Bitcoin at the high end of the 30s, with potential for the lowest we go to around 30k, maybe 29k if things get really, really bad. Well, the risk to reward from where we are right now makes sense to be DCAing in at this point. That means dollar cost averaging, not putting all your funds in at one go, because if things go lower, you're going to wish you had some more dry powder on the sides, but strategically putting your cash into good, strong plays with strong narratives. Not going too far out on the risk curve here, looking for those blue chip items that you want to hold, because if we are in a bear market right now, and this is extended for some time, well, you want to be holding good bags for when we come out on the other side. So that's my outlook on the market right now. I think we're pretty close to the bottom being confirmed, and I think we will get some relief going into the FOMC meeting next week. I think they can't be any more hawkish than they already have, else the US economy is going to go down the pan. Let me know your thoughts down below. What are you doing today? Are you holding on? Are you diamond handed? Drop me a comment down below and let me know how you're getting on. I'll catch you guys in the next one. Goodbye.